Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about CrowdStrike's CRWD stock. So for more videos just like this one, don't forget to go and annihilate that like button right now, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, and with all of that being said, I say let's dive straight into today's story. With my optimistic assessment regarding CrowdStrike, this has proven very well founded since the company has surged by around 35% over the last 3 months. Although my most recent valuation analysis indicates that the stock has reached their fair value price even after a substantial rally, I maintain a buy rating on CRWD stock. To support my perspective, I turn to the wisdom of Warren Buffett, who says, and I quote, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Recent developments affirm that CrowdStrike is indeed a wonderful company. With robust revenue growth and expanding profitability underscores the company's exceptional momentum, which has been attributed to the company's cybersecurity platform. While I personally lack the expertise in cybersecurity engineering, the consistently impressive dollar-based retention rate, which exceeds 120% for this company, suggests to me that CrowdStrike's cybersecurity ecosystem is unparalleled in the market right now. Management's emphasis on revenue growth is not being pursued recklessly either, because rather they are also trying to focus on profitability metrics which demonstrate a rapid expansion rate fueled by the strong cross-selling and upselling capabilities embedded within their own business model. The most recent quarterly earnings report, which was on August 30th, revealed that the company exceeded consensus estimates. On a year-over-year basis, their revenue soared by 36.7%, and their adjusted earnings per share more than doubled during that time period. With improved profitability, this is reflecting in the company's operating margin. Notably, the 7 percentage point year-over-year improvement in their operating margin resulted from significantly enhanced SG&A to revenue margin without compromising the research and development investments. With nearly a quarter of sales dedicated to innovation, CrowdStrike generated $232 million in leveraged free cash flow, marking a robust 45% year-over-year growth. This positive cash flow enabled CrowdStrike to fortify its balance sheet, boasting over $3 billion in cash and a total debt of below $800 million. So clearly they have more than enough cash and or short-term cash equivalents on their balance sheet to cover their total debt load. Therefore, the low leverage ratio and robust short-term liquidity metrics position the company very favorably. With almost $2.4 billion worth of just net cash, CrowdStrike is well positioned to continue substantial investments in innovation and promotion while enhancing its potential for substantial revenue growth in the future. The company's growth momentum is evident in its customer appeal. Despite lacking cybersecurity expertise, I find that consistent high dollar-based retention and very pleased customers has led this company to consistently bring in a high dollar-based retention rate of over 120%, which is a strong indicator of customer satisfaction and loyalty. This retention rate, which exceeds 100%, signifies success in cross-selling and upselling their customers on other products, thus positively impacting the bottom line without incurring additional customer acquisition costs. A notable portion, roughly 63%, of CrowdStrike's subscription customers utilize 5 more modules, with every 4th customer employing 7 or more modules, which is very impressive. This means their business model is working wonderfully. This reflects the effectiveness of CrowdStrike's ecosystem, which ultimately increases switching costs for their customers as they use more and more modules, making them more likely to stick with CrowdStrike over the long term instead of using another company's software and platforms. The company's commitment to innovation is evident in its ongoing investment into research and development, with the management of this company signaling a dedication to introducing new cutting-edge features. Given CrowdStrike's proven track record of technological success, I personally am confident that these innovations will contribute to maintaining impressive retention rates well into the future, which should lead to a higher share price. With the integration of artificial intelligence capabilities, this will further position CrowdStrike at the forefront of the technological landscape. In addition to the company's attractive offerings, which is driving their stellar revenue growth, I anticipate that management will further focus on developing their value to shareholders as well as their customers. As the business continues to scale upwards, CrowdStrike demonstrates strong operating leverage, resulting in rapid free cash flow growth, and that is what we need to focus on as investors. The quote, land and expand go-to-market business model, coupled with a commitment to innovation, instills confidence in the potential for further profitability expansion as revenues continue to grow for this company at a rapid pace. We can also anticipate that this momentum in the revenue growth as well as profitability expansion will continue well into the future, which is an encouraging sign for current investors and even investors looking to invest into this company right now. Although this company is roughly trading at their fair value, it's better to buy this company now and have it grow well into the future instead of always trying to identify the best possible time to buy into a company like this, because potentially you could miss the boat. In the upcoming earnings release, which is currently scheduled for November 28th, we currently have projections and a consensus revenue estimate of this company bringing in $777 million worth of revenue, indicating a 34% year-over-year growth rate. And when identifying a rapidly growing company, ideally we would want their revenue growth rate to be above a 30% CAGR, which CrowdStrike does meet. On the other hand, when we look at their adjusted earnings per share, or EPS, this is expected to follow suit as well, because they're anticipated to expand from an EPS of 40 cents per share up to an earnings per share of 74 cents. Despite the stock rallying by roughly 101% year to date, this is going to be a phenomenal company well into the future. And if you look at the United States stock market and the current valuations of other companies, this company is trading in suit with other companies, especially when we look at their overall sector. While considering the company's very impressive upcoming earnings report, where this company is set to impress, this will further identify robust revenue growth momentum, and we can also use this to compare it against itself historically. Now, we also want to dive deeper into the valuation of this company as we employ a discounted cash flow model, also known as a DCF model or simulation. Right now, we're going to run simulation with a 10% weighted average cost of capital, also known as a WACC. We can also pair this with consensus revenue estimates, which forecast a 22% compounding annual growth rate, or CAGR, for the next decade, which we will also incorporate into this DCF simulation, or this DCF model as it's also known as. We also want to use an 11.2% trailing 12 months free cash flow, or FCF margin, ex stock-based compensation for the base year. And when we use all of this together, according to the DCF simulation, the business's fair value aligns closely with the current market cap, indicating that indeed this stock is fairly valued at their present level. Now, this does swing both ways, because yes, you are not getting a phenomenal buying opportunity into this stock, although the future of this company does look bright. So clearly, if this company were to fall below their average share price or their fair value price right now, that would be an ideal buying opportunity. But since this company does have an upcoming earnings report, this is going to be used as a catalyst to increase their overall share price. So why not jump on board now and potentially use this as an opportunity to trade this company? Or if you like this company for the long term, feel free to hold this company to see what it could develop into further. However, it is crucial to recognize that CrowdStrike and their CRWD stock is an aggressive growth stock, and their valuation is highly contingent on aggressive revenue growth into the future, which is a large assumption. While the stock currently seems fairly valued with a projected 22% revenue CAGR over the next decade, a 5 percentage point reduction in a revenue CAGR would result in a substantial decline in the company's fair value to a market capitalization of $33.6 billion, which is clearly not ideal. It's also important to note that a 17% revenue CAGR over the next decade remains as an ambitious growth assumption, let alone that 22% which we have worked into our overall forecast. So I want to underscore the high sensitivity in which this company currently trades at, and it's based off of the large assumption of their future revenue potential. Therefore, investors should be mindful of the potential risks of this company, such as guidance downgrades, which would substantially negatively impact the overall share price of this company. We could also experience an earnings miss, which would be absolutely catastrophic for this company. If this company deviates from their market anticipation or estimates, it will be very bad for this overall company. However, what could trigger something like this is still broadly unknown. It really just depends on how investors react to various news updates. Additionally, as an internet security company, CrowdStrike faces substantial cybersecurity risks. For instance, in the event of a security breach, whether at one of their customers or within the ecosystem and company themselves, this would be terrible for the company, causing its stock price and share price to crash substantially by potentially 25 to 50%, leading to large losses for investors, let alone financial performance, and they could also lose customers in this same way. Since you've stayed all the way to the end of this video, let me give you my personal thoughts as well as price targets. Currently, the CRWD stock trades for $207.09 per share, while very negative analysts believe this company is worth around $167 per share. So ideally, if you could snag this company for around $167, that would be ideal. Their actual fair value price right now is actually $199.31, while the most bullish analysts believe this company could surge from $207 up to $250 over the next 12 months. Overall, this company is growing very rapidly and it has a large investor following and a lot of analyst support. Therefore, in conclusion, CrowdStrike's CRWD stock remains a buying opportunity according to my assessment, and due to the company's outstanding revenue growth coupled with management's focus on profitability and expansion as well as innovation on top of research and development, I think it justifies its current valuation and its fair value price targets, meaning that right now may be a good time to buy into this company, especially before their catalyst, which is their upcoming earnings report on November 28th. With all of that being said, I would love to hear your thoughts down below. Tell me if you own this company in your portfolio, your thoughts, and always make sure to do your own research. Always go and make sure that this company is good for your personal portfolio, and make sure you are comfortable with this and you have personally done your own research instead of relying on others to do the research for you. With all of that being said, I would love to hear your thoughts down below. Go ahead and annihilate that like button, subscribe if you are new, don't forget to become a member of this channel, and with all of that being said, I will see you in the next YT video.